Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today's March 27th, 2020, Friday. As I record this video, market has been closed for a couple hours now. So recording this Friday night, you're probably going to get this a little later tonight as I am done processing, unloading it. But I hope you guys had a good week this week. We saw a little bit of bounce today. This week, actually, this is the first time we're actually seeing a bounce holding since this entire move to the downside here. As you can see, I actually screened this yesterday, so I think I'm pretty sure Spider is as what now? Spider closed at 253-ish. So this, obviously, it's being a monthly chart. So we are still holding this level. And I tweeted out this yesterday and on Twitter, and some of you have asked me what this means. So when you look at a monthly chart, so you can see there, when you look at a daily chart, there's intraday fluctuations, right? So a lot of time there are wicks that you can see. And this is a monthly chart, right? So what you're seeing is a lower wick. We still have 2 more days left, 30th and 31st, for this monthly candle to be finalized, right? This is a 1 month chart or 1 month candle. You see how in 1 month, how much decline it had faced. And we're almost about halfway, a little less than half, but that's what the long lower wick represents. And I talked about how I'm very interested to see how this unfolds since this monthly chart, this monthly candle is going to be finalized. And we have 2 more days left, Monday and Tuesday. So we'll look into it. I'll update you guys on this monthly chart next week, end of next week. And maybe I'll tweet things out on Wednesday, April 1st, and see how this, we'll follow up on this chart. But basically, if we can stay, because basically what this chart is saying is if we can stay above it, right? So if we stay above 253, 250, I think anywhere about 250-ish, if you can stay above, 250, 250 to 253 by end of March, it will be nicer to see higher price. That means if we can see that by end of March 31st, let's just say today is March 31st and price is around 257. If we're above 257, at least above these moving or this rising uptrend support and the rising pivot, that's what I call rising pivot because it was resistance prior to it and became support. So what this telling us is this big down move that we saw, that abrupt sell-off, it was a huge trap for many long-term investors and potentially even short sellers, thinking that there's a much bigger recession or crash that's going to get us to maybe 2009 lows. So a lot of times, even if you look at if you ever look at intraday volatility, if you look at your daily chart and when you look at like resistance levels or support levels or even a pivot, a lot of times in intraday chart you will see the wick that intraday it will break below it, but towards the end of the day you see you see that a lot happening, right? So you see how body stays above it. Do you see that happening and there's kind of a long lower wick? And then this thing goes right back and reverses back. You've seen that happening a lot on daily charts, correct? When you're trying to see, when you're trying to place your stops or breakout levels, you're trying to, ascertain, are we going to continue lower because we're at a pivotal level, right? So that's what you see in a daily chart. And sometimes it will break below it in an intraday, but then towards the end of the day, it pushes back up and closes above the support, and then sometimes you'll come retest that support and you've seen that happening. Well, this is kind of looking at it in the same concept, but looking at things in a monthly chart. So in a month, intra-month, we saw this thing breaking below it, but maybe towards the end of the month, we break above it. Because if I actually put this in line chart, because right now we're looking at a candle. So you guys know the difference with the line chart and candle chart, right? I wonder if I have... So like, this is a line chart, right? So you see that this is a line. So line chart and candle chart are different because candle chart, you will see the lower wick because candle is going to show the intra-month volatility. But if I actually flip this in an intraday, let's say I actually flip this into candle, right? I cannot flip it in a line because this is a screenshot it. Then you know what's going to look like? It's going to look like this. Here, I'll just try to mimic it like this. That. This will be line chart. That will be 2018 December. Got up, and then like this. That will be a line chart. So if I were to draw that trend line like this, it would hit. You see what I mean? Because it's only gonna show. So when you look at line chart, that's why a lot of people like to look at candles, because candles show full intraday up and down volatility, right? The fluctuations. Line chart only shows the opening and then the closing, and it just connect the dots. So if I actually turn, and this, let's say today is end of March. If I actually turn this a line chart, all it's gonna show is like this right here. It would end right there. That means we're still holding the rising pivot. That means we're still holding the rising uptrend support. What that means is if you're gonna have to close above it and stay above it, we still wanna give benefit of the Dow to the buyers, long-term buyers in the primary term, because we're looking at now a primary uptrend of things, right? What is the definition of uptrend? Higher highs and higher lows, right? You're not gonna see a lot of people looking at things long term because everybody else that you follow on YouTube and Twitter and StockTwits, they're mostly gonna be very, very short term, mostly be concerned about short term. These are the people mostly trying to get the hell out of the way, and then hopefully, you know what I mean, there's a clear signal. Well, if people got out of the way here and they wait for the clear signal there, well, that's not good news, right? So, and you know, same thing here. If you cleared your way here with loss and then this thing goes straight up, and then you thought, okay, well, you know, I want to wait until it, you know, the danger subside. Well, you know, what's going to happen is you're going to miss out most of the move, right? And you might be also thinking, well, you know, I'm kind of scared. We might see another drawdown or something like that, right? And something that I hear a lot is also that people always say, well, you would have a plenty of time get back in. Really, go back and look 2019 January to the entire move. Were you able to gap back in, right? When this thing just V-shaped higher to all-time highs? No. And when most people thought this was good, this was quote-unquote safe, it was worse than ever. But because if I bought it here, if I'm still holding it, well, I'm still breaking even, man. As of today, I'm still breaking. The positions that I held here, let's say I bought here, if I'm still holding it, I'm breaking even. But you closed out your positions here with loss, right? You closed out your position here with loss, and then you waited until it cleared, and you went long here. Well, now double loss. You already lost it here, losing it again with this, right? But if you bought it here and you held through it, you're breaking even. Not too bad, right? So that's kind of what I mean, is that people always say something like, well, you get, you know what I mean? Like you would have, there will be plenty of time to get back in. I mean, how many times people said that back in 2016 and 17, right? When this thing broke out of this right here, right? When broke out and went all the way up, how many people were so afraid that they're going to be retest, they're going to be on a pullback, there's going to be a big correction coming, and this thing just went straight up. It never really gave, you know what I mean, quote unquote safe place to go because, well, I don't know. And then so I think a lot of people are looking at it here, right? Kind of like here, maybe we're gonna see another, and then market just comes down and punishes a lot of the chasers up there, and that's the brutal part of this market. You close out your longs here, you incur loss, and then you get back in where you thought it was safe, and it was even worse than this. You would have been better off if you bought it here, and then maybe close trimmed your positions up here, and then maybe buy some more there. That would have been better off than you wait for it to, quote unquote, safe to get back on, and then all of a sudden you have to face this. You see what I'm saying? So anyway, so that's kind of what I see here on the monthly. I'm gonna go to NASDAQ though, because the NASDAQ is holding up really well here. This is actually linear chart. And you can see here, we're actually holding this uptrend support. That's what I call, just not what I call, but that's pretty well known as rising uptrend support. And that's what you call primary term uptrend. We got higher lows, higher lows, higher lows, and we got the higher low here. We got another higher low there. Because that low is definitely higher than this low. That's what you call an uptrend, right? So, and we got pretty decent looking weekly candle right there. You can see, and that gap, the gap was also filled. And that's what that kind of late day decline that we saw today, because there was a gap that happened this morning, right? And then that gap was filled. And then a lot of times, you know, when the gap gets filled, it does act as instant resistance. We talked about that if you've been following me for the last couple of years. But however, we do have a pretty strong bullish engulfing type of candle there. Obviously, it needs a follow through, but we've seen something similar before. But again, we don't know. We don't know. You know, right now, I think biggest question right now is everybody's asking is, why are we gonna see a V-shaped reversal similar to 2019, or is it gonna be like 2016 where it goes up a little bit and then comes down, retest, maybe retest several times before finally going higher, right? So are we gonna come down, retest, and then go higher, maybe come down, make a brief low, and then go higher? That's the $1 million question. I don't know, nobody does, right? I think a lot of extreme bears are thinking this thing is actually gonna all the way down, you know, maybe Great Depression or actually getting into a recession. I don't believe that. I think maybe come down. I don't know if we're gonna come down and make new lows, or I don't know if we're gonna come down and retest, but I think we're gonna bottom in this vicinity. I don't know exactly how or when, but nobody does. But I think this is a good level that we're gonna see some stabilizing action here. So I think biggest question again would be, are we gonna see a V-shaped reversal like 2019? Or is that going to be a retest double bottom? At this point, I really cannot call it. I called this reversal, V-shaped reversal, because at the time it was kind of, I was able to see it. But right now, I cannot see it. And if you want to compare this to 1987, well, 1987 did come down, retest low once again before getting up. So 1987 scenario is like here. 1987 scenario is something like this. It was to go something like that, got up, pull back, got up, pull back, got up, and then make all-time high. So we had a, you know, sequence of higher lows and kind of stabilized that selling pressure over the period of 4, 5, 6, 7 months before it actually got to the all-time high. It actually took about 1 year and a couple months before it got to all the way back to all-time high. That's 1987 Black Monday. But you know, NASDAQ actually held up so much better. If you actually compare a NASDAQ to 1987, actually today we held up better on the NASDAQ versus 1987, but on the S&P is pretty similar there. But I want to kind of give you a pretty good example of what this may look like. So this is 2016 going all the way to 2020 today. But if we go look at this one, this is actually 2012 and 2016. So that uptrend support held. There was a reason why I was bullish in early 2016. This was one of the reasons why also. This is the reason why that I'm bullish on the NASDAQ today. And this is the reason why I was bullish in 2016. And you can see this time it came down, made this double bottom here, made retest lows, but this was actually about, I think, 15% or so, and then we went all the way back and came all the way back down. So we're a little bit in a different scenario because this was obviously much steeper, faster moves. I don't think we're gonna go all the way back up and come all the way down. I think that's too big of a fluctuation, but there's a good chance we could go up a little bit and then pull back and then get up, or we hold here next couple days and then continue to march higher. So there are many different ways this market can stabilize and reverse back up, but I think we're getting close. But again, I don't know exactly how, in what fashion, or when, but I think market is stabilizing. This is S&P 500 index versus NASDAQ, or not NASDAQ, the VIX, the volatility index for S&P there. So you can see, you know, VIX gone up as high as where it was back in 2018. The difference with the 2018 and today is 2018, it took a year and a half for this bear market to truly establish it with itself. Year and a half. So it was very, very heavy when it actually fell. Well, today though, it didn't take year and a half for this to move. And a lot of people think that, well, okay, isn't that worse then? It took faster for this to come down versus 2018. Actually, 2008. Actually, history suggests here, I'll show you real quick. History says no. Because when things come down fast, it can recover that much faster. So you can see that 2000, this is NASDAQ going all the way to the 1960s. That was that crash, 2008 crash. It took about 5-6 years before it went all the way back to all-time high. You see, 5-6 years. Can you imagine? It takes 5-6 years. Let's say if you're long up here and you just want to recover, go back to even, it took you 5 to 6 years. But what about, look at all these 20%, 24, 28, 30, 35, 31, 16. These were 6 months a recovery, 3 months recovery, 3 months recovery. The worst case scenario, 1 year, 4 months in 1987, but 4 months, 2.5 months, 1 month, right? So a lot of times when there's a fast down move, it could be met with a fast up move. And we saw that happening in 2018, right here, late 2018, we saw a very fast 20% decline, the fastest ever, right? And then we saw very, very fast V-shaped recovery to the upside. And you probably don't hear a lot of people saying there's going to be retests, there's going to be retests, there might be a marginal lows. I'm just letting you guys know that people are saying the exact same thing 2018 December. And I was telling you guys that we're going to see a V-shaped reversal. Well, I can't see this time. I cannot call things this time because I'm not sure, because I think it came down much, much lower than I've anticipated. I actually thought, you know, it might stop somewhere up here, maybe 280s or something like that, but obviously it just completely overshot it. But the VIX definitely got back to where similar level as to 2008, 2009 level. And you can see in 2008 scenario, we did make a lower low before bottoming. But keep in mind the weight of this downtrend was heavier because it took 1 year, 1 year, 4, 5, 6 months to really finally this downtrend. That was a real downtrend. That was a real recession. This economy got into a recession for a year and 6 months. You see what I'm saying? This all happened in 1 month, and we are already seeing huge, like, where's the chart go? Huge lower wick here, right? There was no real primary downtrend. This was definitely primary downtrend, right? Primary downtrend. We got lower highs, lower lows. This thing, we just came straight down. I mean, I can't even maybe do this, and you can see we're still holding that. We're still at a level. For this to truly become downtrend, there has to be a cultivation of lower highs and lower lows. We haven't seen that again. But when you see VIX coming down or coming up as a similar level as 2008, I actually think that we're getting very, very near to all-time or a bottoming here. And I don't think, just because the weight, it was much, much weightier in 2008 and 2009. So even though this was extremely oversold, we had to see another lower low just to push this last remaining bear bulls out, just create another panic, and then that was the bottom, right? But here, I think we're in a different scenario. We're not in a financial crisis right now. We're just panicking over this virus. Again, everybody got different ideas and opinions and conjecturing thoughts about this virus. Some people are going to say, well, it's going to be worse than 2008 because this virus is going to kill everything, kill the economy. Again, that's your opinion. That's your conjecturing thoughts about this market. I don't believe so. I actually believe that it's going to be blow over in about within a year, and we're never going to be talking about that, and probably, you know, by early next year or as early as maybe end of this year. That again, that's my thought. That's my opinion. Again, we all have different opinions on it. And, you know, people always, you know, the funny thing about social media is people always love to argue and debate and things like that and accuse you of something and, no, you're wrong, blah, blah, blah. Seriously, though, if you think I'm wrong and you're convicted that this virus is going to kill this market, we're going to truly get into recession, then put your money based on your conviction. You don't need to, man, you don't need to convince anybody, man. You don't need to argue with anybody, with some strangers online, bro. You just put that money where your conviction is. Only reason why you want to argue with someone who has opposite view of you is because you're insecure with your conviction. So you want to let other people to be on board with your conviction. That's the reason why you argue and you attack the people who has a different view than you are, because you're insecure with your own conviction. Because if you're totally, fully convicted of your where the direction of this market is because of this pandemic, then put all your money to the downside, and you don't need to talk to anybody, you don't have to argue with anybody, you just have such a big conviction, you just wait until you bank. But the problem is, man, all these people on StockTwits and Twitter and social media, behind their computer, behind their mobile phone, right? Acting all hard and trying to just go and attack somebody, calling people stupid and idiots and stuff like that online, who holds opposite view as they are, is because they are insecure with their views. Don't you understand? So none of you, there's a reason why I turned off my comments on YouTube, because I don't want to hear shit. I don't care what you think, right? I don't care what you think. I'm sharing my opinion, my view. Either you hear it or you don't hear it. Take it or leave it, right? Because there's all the crap information out there anyway, right? So there's so much information nowadays you can pull from the internet, but real good information get choked out. People just think that it just gets a high views, and you know what I mean. It's a good information. It's actually not. When it comes to entertainment, yes. If everybody likes it, if everything is funny, then probably true. But when it comes to financial markets, no. This is why that market always follows the majority. So if you're convicted that this virus pandemic is going to kill this economy and we're going to get into Great Depression, put your money there. You don't need to argue with anybody. You don't need to attack anybody who holds different view as you are, and just wait until bank. You don't need to convince anyone. Only reason you're trying to convince anybody is because you're insecure, right? So I think we're bottoming here. I think we're stabilizing here. I think we're going to continue. I actually think we might even get to all-time highs. I don't know. Early as this year. As fast as, this is NASDAQ here, if we can get some of these, because 1987 did take 1 year, 4 months. So I think just based on the historical facts that you're seeing here in this screen, the worst case scenario will be about 1 year, 4 months. As early as 6 to 3 months, I think we can recover back to all-time high. As early as 6 to 3 months, maybe 8, 9 months or something like that. But the worst case scenario, maybe 1 year, 4 months, if it's like 1987. So that's where I'm at. So I think we're near the lows, and I think only thing we're wondering about is, are we gonna see a V shape? Is this gonna take a lot of its time? Just kind of like take its time for months and months to recover, because that's how it happened actually in 1987. It took months and months cultivating higher lows for me. We don't know. Nobody knows. So we'll have to continue to kind of follow up on that. And one last thing before I let you guys go would be, I think this one. I think you guys want an update on this one. Well, so this was from last week, right? Last weekend video, I talked about this. This is Dow Jones Industrial Average, which is today, 2020 there. And this is 1962. It's very, very similar there. We made a new highs, and then it just crashed. And then you can see we actually made a lower low, and similar thing happened here in 1962. And so here is updated chart right there. So this is same chart here. So you can see we actually got pretty long lower, more than I guess, well, no, we got 2 more days. We got 2 more days. So you see that long wick. Yeah, actually that's pretty similar there. So we got 2 more days to go. So as of now, you can see that's the low right here. And then you can see that's the high. That thing really tanked though. Dow really, really tanked. But you can see we're just hovering near that level there. So if we go back to that chart right here, and you can also see in this chart, that was a low, we're hovering there. So you see that was a stabilization price action there. 1, 2, 3, 4. About 4 months is kind of hang there, build a bait, and then market just thrived back. You know, that was 90% running in few years. So last time I shared that chart was last weekend. We didn't see any wick, as you can see here. Today I'm sharing that we got big, long lower wick there, and we're hanging around in this vicinity there. Could it look like similar to 1962? Could it look similar to that? Maybe, maybe not. I'm not sure. We'll see. I'll update you guys next week. Go from there. Again, we got 2 more days. We got 2 more days of trading. In the month of March, 30th and 31st. So I'll see how the market is behaving Monday and Tuesday, and I'll update you guys maybe Wednesday or something like that going forward. You can obviously follow me at 2KKim on Twitter, and I'll share some of these updated charts maybe on this one, because again, this is a monthly candle, so I'm interested to see how this monthly candle is going to be finalized. We'll go from there. You guys have a wonderful weekend, and good luck trading next week.